Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor at WeissRatings.com. Welcome back to the show, Sean.
Thanks very much for having me on.
Wow. So the start to the year is supposed to tell us how the entire year is supposed to go, according to some pundits. And taking a look at the stock markets, are all over the place. So it looks like it's going to be what they say, an interesting year, because every indice seems to have a mind of its own. The NASDAQ seems to be the one taking it on the nose the most, and yet has the biggest recoveries. How's that playing into your view of things?
Yeah, well, really, my view of things is this market was overbought anyway. It's really disconnected from the underlying economy. And so it was due for a correction anyway, because nothing goes up in a straight line. And so what we are seeing now is the market overreacting to what it perceives as bad news. And let's be clear, the underlying economy is incredibly strong. We saw the U.S. economy grow at an annual rate of 6.9% in the fourth quarter. When was the last time we had that? That's really, really strong. So underlying economy is strong, but weakness in the markets, and we could have more weakness, because now the market is beginning to price in many more rate hikes by the Fed. The estimates drifting around from like Wall Street and stuff are like up to 7 rate hikes this year. Chairman Powell didn't say anything to agree with that, but he didn't deter that. He's just eager to get on with normalizing the interest rate structure. I'm still looking at 3 to 4 rate hikes this year. I think that's all we'll probably get. The market disagrees with me, and 90% of the market is psychology. Therefore, what I've been doing with my subscribers is we've just been grabbing gains on positions we already had, making the portfolios much smaller, and just waiting for the next buying opportunity. I don't believe we've seen the bottom. I think that the market still has fear to price in. And again, I believe this is psychological. I don't believe that the Fed is going to hike rates nearly as much as the street is currently pricing in. And so we'll just have to write it out. But we're also seeing the rotation from growth to value. That's an ongoing thing. It's something I've been writing about in my wealth wave columns for at least the past few weeks. And so really, we have portfolios that are already set up for that anyway. We're more value oriented. So, as the old saying goes, it isn't a stock market, it's a market of stocks. I think there's places you can look for strength in this market. And so you just have to, be looking for strength, not follow the herd. Look out for the Chicken Littles. They don't really know what they're talking about. I believe there's a lot of underlying strength in the economy, but we could see the market come down quite some more just because there was so much air in there anyway.
U.S. Unemployment is a little over 3.5%. A lot of experts say you can't get any lower than that. In other words, anybody who wants a job should have a job right now. Is that good economic news? And apparently they're not asking for huge pay raises either, except for a few exceptions.
Yeah, well, you would think would be good news, but not if you watch, say, Fox News, where it's, all bad news all the time. It seems to be a very strong economy. And now there is something going on that could have an adverse effect, which is and I'm speaking about the U.S. now, not Canada. We were sending out checks to families. They were child tax credit checks that spending like $300 per month. And I think that was helping consumer spending quite a bit. Those have ended, thanks to the Republicans and Joe Manchin, who will not vote for them. And as you know, the U.S. Senate is split right down the middle. So once you get one Democrat to vote against it, it's gone. So that could kind of drag on things. But in the meantime, that's only part of the economy, and the rest of it looks very strong. For example, I've been buying energy stocks for quite some time, and really has been making my subscribers a heck of a lot of money. Energy is looking great. It's looking very strong. Who ever heard of an economic turndown when energy prices are as high as they are? I mean, you could have an economic turndown triggered by high energy prices, but energy prices aren't that high yet. They're just very strong right now. So again, that's another sign of strength for me, and that kind of indicates to me where I should be putting, or rather, where I should be telling my subscribers to put their money.
Now, the International Energy Agency says not enough money is being put into oil and gas exploration. That'll lead to shortages. We know shortages always lead to higher prices. So these green people who want to see alternative energy may, in fact, force people into investing into oil and gas because it's just so prosperous.
Yeah, well, you and I as individuals really can't affect the world, so I'm not going to worry about the things I invest in being, they're dirty stocks and stuff. There's plenty of terrible stuff in the world. In fact, I was once told by someone from China, if you knew how your shoes were made, Americans would go barefoot. I think he was wrong. I think Americans don't care how their shoes are made. But the fact is, there's lots of terrible things in the world, and I'm just a simple guy trying to make people money. One of the places to make money now is energy because of, like, the thing you just mentioned. The fact that not enough money has been invested in energy exploration, and it's still ongoing. They're still not spending money on energy exploration. Part of it, and this really grabs the headlines, is that the fossil fuel industry can see EVs, can see all sorts of electric stuff coming, so they're just worried about the long term. They have to think long term. Another part is, and I think this is the more important part, there's tremendous pressure from shareholders, especially activist shareholders, on these companies not to do anything overreaching with their money. They want them to be solvent and to have a backstop in case things turn down. So we're seeing a much more conservative outlook on investing in the future in the energy space. And what that means is higher oil and gas prices. There's just no way around it. So if you're investing in these markets, that's something that should attract your attention, especially if it's a company that's either holding its oil and gas production steady or actually growing its oil and gas production. That's a company that could do quite well.
We'll have more with Sean Brodrick right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, what's going on with uranium? So many people saying small, efficient, and much safer atomic power plants are the alternative to using solar or wind, which is unreliable and hard to store.
Yeah, well, that's far down the road, really. I mean, if you can find investors who can see more than 5 minutes in front of their noses, you're really doing something unusual in this market. People don't like to think longer term. Of course, uranium is a good bet longer term. In the shorter term, I mean, it's not doing well. Uranium stocks just aren't doing that well. And that's amazing considering what we're seeing going on in Kazakhstan, where they fired a whole bunch of the people running the national uranium company. Now, I've heard this is right-sizing it, and they're just trying to get rid of some deadwood and stuff like that. But the market likes stability. Market doesn't like instability. If you fire a whole bunch of people at the top of the company, that's inherently unstable. I would think uranium should do much better than it's doing right now. I don't know why it's not. I think it's a great bet for the future. But then I can say that about a lot of things. Heck, we're seeing the price of lithium hit all-time highs in China, just soaring. And yet lithium stocks are acting like everyone's going to give up on electric vehicles next month. It's really a tough market to figure out right now. A lot of it, again, may be that shift from growth to value. And also, there's the fact that interest rate hikes are coming. I mean, apparently I'm like out of step with the market here. I only think there's like 3 or 4 coming, but no matter what you think, interest rates are coming. What does that mean? That means companies that need to borrow money to keep operations going. This is explorers, developers, you name it, even some producers, just because they need money for all sorts of things. Well, their cost of doing business is going to get more expensive. And so now we're starting to see that reflected in these stocks. I think what people should be doing is they should be looking at value stocks that have decent growth. You know, I mean, they aren't growth stocks, but they are growing their businesses okay. They pay dividends and they grow those dividends. Those are the stocks that will outperform here simply because they have the cushions that the high-flying tech growth stocks do not have, especially in a higher interest rate environment. I'm talking about companies that don't need to borrow money. They're actually going to be doing very well in the next couple of years, and I think that's where people should be looking.
Now, we had a lot of financial institutions and major companies have some super high profits in the last quarter, and their whole plan is to buy back their shares at record high prices. Should they be keeping that cash on hand instead, in case interest rates go up so they don't have to borrow money?
Well, I think that really depends from company to company. One thing I have noticed is no matter how good the news is, the market doesn't like it. That's a sign of a market that has further work to do on the downside. I mean, when you start seeing news that's like maybe not bad but not good, treated as good news, that's when you know that it's time to buy. Right now, it really looks like because the market was priced for perfection, even perfection doesn't satisfy people. And so that means the major indices will go lower, and I mean, you just have to adjust to that. Individual stocks can go higher, and I can think of some of ours that are doing quite well, but, you know, they're really out of step with what the major indices are doing now and will probably do for, I don't know, at least another month. It's really hard to say how long this will take. That's always the hard thing, saying how long a correction will last. Usually corrections are shorter than the bull run. That's just a truism of the market. But how long will it actually last? I don't know.
How are you seeing precious metals right now?
I just wrote a very bullish story on precious metals. We are seeing funds continue to pick up precious metals. The GLD, which is the big U.S. physical gold ETF, just had its biggest inflows ever last Friday. And we're also seeing interest from overseas. So part of this could be the inflation scare. For the stocks, well, at least those that have cash flow, these stocks were beaten down anyway. Some of them look like incredible values right now, so they might just go higher anyway. But I'd expect the price of gold to drift higher towards 1900. That would not surprise me at all. I'm not sure how long it would take, but I think this year could be quite bullish for gold, partly because last year was so bad. You know, you have a bad year, then you have a good year. So we had the stuffing beaten out of gold stocks last year. This year it could be quite good for many of them, and that's how I'm playing.
Are you looking at cryptocurrencies at all?
We're discussing those a lot at work. We actually have a bunch of publications that focus on cryptos, NFTs, stuff like that. And, I don't do it. There's only so much I can follow. I mean, look at the things I follow now. I follow gold and silver, oil and gas, cannabis, industrial metals. There's only so much you can spread yourself around, right? So I am not doing that stuff, but certainly it's an important part of what they do at like Weiss Ratings. They just grab gains of several thousand% on something. Again, I'm not closely involved with what goes on there, but they seem to have it pretty well figured out. It's incredibly volatile. One thing that I do point out in our meetings, because of course you always have to have a naysayer there, is that Bitcoin and the other cryptocurrencies got hammered during this recent pullback. So people shouldn't talk about them as a store of value, because obviously they're not. Instead, they're just leveraged to the stock market and free money, just like everything else. So, I mean, certainly it looks like there's a lot more money to be made in that space, and I don't claim to understand all of it, but I can certainly see how it works out quite well for some people. And I expect that the Weiss Rating subscribers will continue to do quite well.
Cryptos and electric vehicles, I think, are kind of the same. It's like the start of the automobile at the turn of the last century, when there were hundreds, if not thousands, of manufacturers trying to make it, but in the end, only 3 or 4 were making money at it. Is this the same thing with cryptos and electric vehicles? We don't know who's going to be the market leader yet.
Well, that's an interesting point of view. I have to say that I don't put cryptos and electric vehicles in the same basket. I mean, simply because I can see the actual physical demand for electric vehicles quite strongly. And anybody can create a crypto. In fact, something funny happened this past week. You probably saw it. Elon Musk tweeted to McDonald's and said, boy, wouldn't it be great if McDonald's took Dogecoin, or else however he pronounces that cryptocurrency, at its restaurant. And so then McDonald's tweeted back to him and said, well, wouldn't it be great if Tesla took in payment Grimace coins, which don't exist, right? But they put a picture of Grimace on a coin. In very short order, multiple people rolled out Grimace coins, and there's a Grimace coin NFT right now. So that just shows you how wild that market is right now. And you can actually create pretty much anything at this point. Maybe I should come up with a Sean coin. I don't know. I don't know what you'd use it for, except to throw at people to make them get off your lawn. But it is a Wild West and open world of potential all at the same time. So we'll have to see how that goes.
Sean, thank you so much for chatting with us.
Well, thanks very much for having me on.
My guest has been Sean Brodrick, senior editor at WeissRatings.com. If you have any questions for Sean, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.